morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar dip a little bit further and trying to come back a bit. Here, the euro pushed into resistance level right up in here, but you see a little bit under pressure. And we did get the cable yesterday to close above the key 2602. We'll get into that, and obviously the dollar yen slipping a little bit, as well as the dollar CAD pairing back here. So we're going to get into those. We did also see the indices also make a return push higher here later into the day yesterday. And here we are with the NASDAQ and pushing higher. We returned to higher, but we're still holding up at these upper levels. And I think we kind of caught some people on the wrong side. But one of the things I was stressing yesterday is that's helpful for trying to sell rallies, and which has helped me because I know I've made the same mistake, is just wait for the actual setup. And then, if you're going to go in and do that before you just step in and blindly sell a level, which is essentially what I did yesterday in the euro. And yesterday during the US session, fortunately was able to dodge a bullet, but it's clearly in a buy mode. There was no reason to step in at a particular given level. I didn't have an actual setup to go and say, you can see here with a little bit coming into resistance here, you get a little bit of a graystone doji. The market eventually does pull back. But once again, like I said, there's nothing. You can see here we're clearly in the buy mode. There's nothing to indicate we're running out of gas other than, like I said, if you were to go on and bear with me. Right there, across the body. So you can see we get a little bit of a gravestone doji. And even then, we still push higher. If your stop's a little bit, we give some room up in here. We do end up eventually pairing back, not a whole lot, but I'm just saying is if you just wait for the setup as opposed to just blindly coming in at a level, that certainly will go on and help. Take a look here with the SPOOs. And obviously, like I said, I can see where it's frustrating to some people thinking these markets are overdone. They don't, reflect reality. But the point is that the only way to keep ourselves from getting chopped around is literally just to go with the technicals, because right now in these markets that are so much liquidity, and I think China was still, I think it was a couple of days ago, they were on their fifth straight, highest session since 2011, or biggest moves. And yesterday they were still running it higher. So once again, it's only the technicals that are going to, keep us from, getting into any trouble or making the mistake of look at this NASDAQ on a 2-hour chart. That thing is just, there's nothing to say, okay, it's a good area to short. I mean, we closed above this bar here on the 2H, so that really positions ourselves to move higher. I mean, so you really want to see what I like to do is see a confluence of different time frames and say, okay, I've got something. We did have something here on the half hour with this gravestone doji, but that's here on the S&Ps, but looking here on the NASDAQ, a little bit here. But even then, we still pushed hard because, once again, that's what I encountered with the euro. I mean, we're in a full buy mode here. So you don't want to just go willy-nilly into a level. If you're so adamant to short, then at least wait till you get a setup, because then you'll have things working on your side a bit. Moving back into FX. Let's go and take a look at the data. for the day. We did have German exports come out. Not as strong as what they would have expected. Reuters poll for 13.8% came in at 9. Imports are a little bit lower here. And as we roll through the rest of the day, the Ipsos comes in for Germany at 6 a.m. Eastern, as well as for France. A little bit of odd times for this to be released. Italian also at 6 a.m. So we will get some data coming out here. To me, it seems to be a bit of a strange time for them to be released, but look for that at 6 a.m. Eastern. Also, we have the Spanish also being released at that time. About an hour later, we do have Mexican inflation. And as we roll into the States, we'll have initial jobless claims and wholesale inventories and sales. Those will be at 10 a.m. Eastern with jobless claims at 8:30 Eastern. And we did see a pretty good strong move yesterday in gold. And we'll take a run there quickly. Well, look at this move up in here. We made it up to 1830. We paired back just a bit here, but we're still staying fairly strong. You can see here, almost like a gravestone doji, but you can see here, even then we didn't pair back very much. That's on a 2-hour chart. And you can see here just with that solid buy signal, and it's just riding it. Look at that. And that's why you have to go in and be careful. Maybe not with gold. Probably people aren't looking to necessarily short that. But once again, on any of these markets, to step in and just try and short at levels. I can see, once again, with the equities, a lot of this doesn't make any sense. It's like, we have, the coronavirus cases, so many people unemployed, and how can these markets just continue to go higher? And it's just, like I said, it's liquidity. Essentially that's it. I guess one, I think of the right word, but comparison, I guess, is if you had a fire and it's, in the winter, you're thinking, how can this fire stay this way? It's windy, it's cold. I don't think the fire, but if someone's sitting there with a can of gas or fuel and they keep throwing it on there, essentially what we're seeing with liquidity from the central banks, then it can keep on going. And that's what I'm saying is, I myself have tried to rationalize, how could this be so high? I'm talking about these indices, and don't bother rationalize it. The only thing that's going to keep you from getting yourself into trouble for those that are trying to short is at the very least, if you're going to go against a trend, wait for a setup. That way you'll have, the market's moving in your direction to a certain extent. We saw it right here. After we made those highs, you wouldn't sell into that, but we do get a bit of a gravestone doji here, and then you do see the market pair back. So at least you've got, if you're going to do that, if you come in here on this first run, you pretty much get knocked around right here, but we take a dip back, and so maybe we run out of gas, and then we finally get a little bit of a gravestone doji, which comes into this hide in here, probably look at something in the 5 minutes, or maybe some resistance, and at least you put some percentages on your side. It didn't pull back a whole lot, but it did some, and that's what I'm saying is, if you're, that's why yesterday when I came in and we were in a buy mode in this 30-minute, you can see here, and we had a beautiful setup. I wasn't up at that time, but look here, you get this hammer, you return back, probably dipped a little bit further than what I would have expected, but nonetheless, right here, we hold here with two little mini hammers off of this big hammer on the pullback, and then right there, you can see with it, exponential moving average crossover. There's the buy signal. And once we get back above 1313, we start moving here. And I came in and sold against this because, it's coming into a level which on the 2 hour, there was 1351, which I'd noted. Now, before that, you can see this was before we even got here. We were still working higher. But, I was under some, duress at the time. Came very close to getting stopped out. I think I was like 2 ticks away from getting stopped out. Eventually, we came back and I was able to get out with a couple of nickels. But I'm glad that I did get the heck out of Dodge. And like I said, with that close above 1307 on the daily, really opened the door for us to move higher. And move higher is exactly what we just did here, in the euro. We came into a level here. I think it's around 1372. So we did get a pause up there, and we saw this market pare back, but it still remains in a buy mode. So in those particular situations, you could be buying on these pullbacks, and you can see that 45 offers a decent level here. With that, we'll go in and take a look at the news, and then we'll move into the analysis. So the Australian and New Zealand dollars track U.S. equity strength as risk barometer. The Australian and New Zealand dollars held firm on Thursday as the risk-leveraged currencies maintained their recent close correlation to U.S. equities, where tech stocks hit record highs overnight. They also stood at 69.75. Him got as far as 69.95 earlier, before again failing to clear the 70-cent chart barrier. The Kiwi steadied at 65.68 after having touched 65.83, a whisker from the June peak of 65.85. A break there would take it to ground last trod in late January. Both have been tracking U.S. stocks as a barometer of global risk appetite, even as Australia has suffered a new outbreak of coronavirus that all but shut down its second largest city of Melbourne. And this is another, example here. Anyone that would be looking at this, and this issue with Melbourne really happened like almost 3 days ago. And we did get a pair back a bit after the RBA, and they'd be, oh, well, this for sure now is done. And here comes the Aussie and the Kiwi still pushing higher again. And probably thinking, this doesn't make any sense, but you can't trade on what makes sense. Like I said, throw rationalization out the window. Just go with technical analysis. The lockdown is set to temper an unexpected rebound in economic activity this quarter after what is likely to be a vicious contraction in the June quarter. It would also eat into the already strained tax revenues and likely to prompt further fiscal stimulus. So, someone could be arguing, oh, it's got to do this, it's got to do that. And then here the Kiwi and Aussie continue to stay, bid. The government is due to release an update on the budget and new policy measures on July 23rd. With a spike of COVID-19 in Victoria, seeing new mobility restrictions, there is now clear risk that the stimulus expanded more than we expected, said George Tharanou. He now expects the federal government budget deficit to balloon to $193 billion in the year to end 2021. That would be up from an expected 83 billion Aussie dollars in 2019-20. The row also forecasts government debt would climb to 80% of gross domestic product by the year 2021, up from 52% in 2018. So far, the market has been sanguine about the expansion of government debt, with bond traders drawing strong demand, or it should be bond tenders, strong demand, and yields remaining near historic lows. The dollar falls as the yuan leads the charge in risk-on trades. The dollar fell against most currencies on Thursday as a rally in riskier assets such as global equities and commodities put a dent in the safe haven demand for the U.S. currency. China's yuan rose to a 4-month high against the greenback, extending recent gains as investors of all stripes increased positions in Chinese stocks due to growing signs of a recovery in the world's second largest economy. Lingering worries about the spread of the coronavirus would keep some currency pairs in a tight range, but the dollar's losses are gradually increasing as sentiment favors riskier bets on long-term economic growth. Rising stocks and a dip in treasury yields are slight negatives for the dollar, but the market can't move too far because we still have to worry about the virus. A lot of major U.S. economic data have been positive, so this will be less of a trading factor going forward. People are looking for cues from stocks, yields, and hedging costs. Against the euro, the dollar fell to 13.65, reaching a 1-month low. The euro could get a further boost later in the day as Germany is scheduled to release export data. We did get that. It was a little bit less than expected. Economists expect shipments from the Eurozone's largest economy to rebound sharply in May. Look, remember, they're looking for 13.9%. They got around, what was it, 9.2, so it wasn't as strong, and may have been the reason why we saw the euro come off of those levels that we saw earlier this morning. Chinese shares continued their recent rally and surged to a 5-year high during the Asian session. Futures pointed to further gains in Europe. European equities, highlighting the enthusiasm for risk-on trades. Investors are also looking at U.S. weekly jobless claims later on Thursday, but the dollar looks set to remain on the back foot until then. So with that, we'll go and move into some analysis, and it appears that that's probably why we did go and take this dip from here. Those German export data was not as strong as what was expected. They're looking for 13.2%. We'll get back to that. So they were looking for 13.8, basically looking for 14%, and we came in at 9. So that was roughly, what, like about 25%, if not almost close to 30% lower than what they expected. Hence, we saw this pull back, I should say, or pair back in the euro. And lastly, let's go and take a look at the morning bid. China's yuan seems to have decisively sliced past 7 per dollar to a new mid-March high, up almost 3% since the end of May. Chinese stocks, too, are gangbusters. The Shenzhen Blue Chip Index has risen for an 8th straight day. Holy smokes. By adding another 1.5%. It's already risen 16% this month, shrugging off tensions with the West over the Hong Kong and economic uncertainty caused by COVID. China's gains have lifted world stocks too. European bourses are set up thoroughly. Up though, U.S. equity futures are flat to a touch weaker. Also improving risk sentiment is downward dollar momentum. It's set at a new 1-month low against the euro, 3-week low versus the pound, and 4-month lows against the Swissy. Essentially, that's a green light for emerging markets, and EM currency index is a 1-month high. Trade and commodity-related currencies are also reacting to the Chinese mini boom. The New Zealand dollar is at its highest since January, for instance, and the Aussie's at a 1-month high. The other story is gold scaling $1,800 an ounce for the first time since 2011. Whether that's down to safe haven bid caused by the elevated COVID count or a reaction to the inflation fears remains unclear. In favor of the inflation argument, Deutsche Bank notes U.S. money supply is up 25% on the year. Only the 10th time in 190 years the money supply is running above 20%. And you can see here gold outperforming the dollar index, S&P, and 10-year yields. Look at that. Certainly seen that dichotomy. So far, there's little signs of the inflation surge. China's factory gate prices fell 3% from a year earlier, but the declines slowed from 3.7% in May. In the Eurozone, German exports surged 9% in May after diving 24% in April. Imports rose by 3.5% after a 16.5% slump. Thursday snapshot of the weekly U.S. jobless claims will show if there's an impact for the rising U.S. COVID-19 count. More than 60,000 new cases were reported across the country on Wednesday, with a daily death toll of more than 900. But despite the fresh restrictions in many states, energy use is improving, supporting oil prices. U.S. gasoline stocks fell by 4.8 million barrels last week, and demand climbed to 8.8 barrels, the highest since March 20th. Federal Reserve officials have cast doubt recently on economic recovery, knowing that the risk from an in July fiscal cliff when enhanced unemployment benefits expire. They are also limited, however, at the risk of more fiscal and monetary action. So with that, let's go and move into the analysis now. The good thing is we kind of go over a little bit of news and gives us a lay of the land of where things are. So, one moment. So the euro closed above key level 1307 while approaching 1337. You can see here, but we did close over that key 1307. Resistance ahead will be 1385 with support at 1276. Well, we topped out at 1371. You can see here, and that's a resistance level right there. You can see there, but we had it for 1385. The German data is what weakened it. And support will be 1276. Moving on to cable. Cable closed above the weekly level of 2602, opening a challenge for 2742. Immediate resistance will be 2695. Support will be 2532. And moving on to the Aussie dollar. The prior slight pullback post RBA was quickly reversed with the close at new recent highs for yesterday. Resistance is going to be 70.27, as the market may not be satisfied until stops are taken out above 70 cents. Support will be 69.12. So we're going to go with 70.27, looking out. And we support at 69.12. Moving on to the Kiwi. And like I said, look at that increase in cases we had in Melbourne. And look, we got a slight dip post RBA. So look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9. Essentially 2 weeks of gains with the exception of 1 day. And here we are pushing higher. And for someone who's trading on fundamentals, they must be exasperated. They're like, wait a minute, we just had we're having a bit of a resurgence here. We've seen Melbourne close down. We did get the RBA come out. It looks like, we saw there, debt to GDP is going to increase like crazy. Certainly this thing's going to come down. And look at that, new recent highs again. You can't trade on rationality. I mean, it's just like you're trying to say this fire's got to go out, but someone's throwing gas on it, the central bank. So to trade that way is just nonsensical. You can't trade on rationality. These markets are proving that. The only hope you have is to just trade on the technicals, whether it's medium term or long term, medium term, or intraday. But that's your only or our only saving grace. Let's go and move on to Kiwi. So the Kiwi, just like its cousin Aussie, quickly turned the prior day's slide into gains on Wednesday. Resistance will be 65.14 with support at 65.09. You can see here the previous day we had 65.94. You can see here 65.94. But looking for them to punch a little bit higher. So resistance will be 65.14. And it doesn't show any signs of backing off. And meant to be, that should be 66.14. Obviously, we're going higher. Support's now 65.09. The dollar CAD closed below bias chart support of 35.20 to close at its lowest level in nearly 3 weeks. Immediate support is going to be 34.65 with a move potentially down to 34.37 before buyers step in. Resistance is going to be 35.50. So we're looking for the immediate support at 34.65. And once again, I'll make the case again. I saw someone in the chat room yesterday afternoon, they couldn't believe the dollar CAD was still going lower here, and they're mentioning about the demand and stabilization in the oil reports that we got. None of that is going to make any difference. That's what I'm saying. Once again, you can't trade on rationality here. Also, Canada is looking like they're going to have to increase a lot of debt. And you're thinking, okay, well, now the dollar CAD should really be gaining. It's not. We're on our lows right now. Once again, just reiterating the point that you have to just trade the technicals on this. Moving on to the dollar peso. So the dollar peso paired back after a strong close on Tuesday. Resistance will be 22.85. You can see that clears a bell. We supported 22.48. So there's no changes in here, except I think on the upside. Yeah, upside 22.85, but the support remains 22.48. On to the dollar yen. So the dollar yen posted a bearish engulfing bar right here. Let's move this chart. It might be easier to see it. There we go. So the dollar yen posted a bearish engulfing bar, albeit in a relatively tight range. See here. Support will be 675 with resistance at 757. And moving into the cash dollar index. The dollar index saw its lowest close in 2 weeks. The index is poised to challenge 96 even. Minor support does come in at 96.11 and resistance is 96.75. And with that, we'll move into the cross rates. Well, we just keep pressing higher and higher. Look at this. And we talked about that yesterday, is that with this Kiwi continuing to press higher and yen relatively quiet, that this could keep on pushing higher. It's just continuing to. We had 70.52, and you can see the lower end of this. Let's move this out of the way. See the lower end of this bar? Comes in right there at 70.68. We'll go right there. You can see right there, here, and here. We'll go with that. It's very tight, but we'll go with that, 70.68. See if this market may slow down a bit here, but these are essentially just mile markers on the road higher. The support we had at 69.30, obviously that needs to be adjusted too. Right there. So it's going to be 69.47. There's simply no let up on some of these Kiwi pairs. A little bit of a gravestone doji, at least for right now, with the euro yen. We did have 21.82, and the high was 21.97. We'll stick with 21.82 here. And support, we'll keep it at 20.75 if we do get a little bit of a pair back. The market does seem a little bit stretched here. Look at that. Still pushing higher, but on the thought that we do eventually get that pullback here, it may not even be much, then that will be a downside immediate target, which the price try and step in and defend that. Let's go on and move in now to the euro odd. This market is absolutely dead in the water. No changes here in the euro odd. I think it's pretty clear why that is the case. Upside is 62.68, downside 61.48. And let's go move into the euro kiwi. Well, surprise, surprise, no changes here either. Look at this. We are just dead in the water. We're not going anywhere. And that's when the euro was appreciating, at least against the dollar was, but look at that. We're just stuck in the mud. Let's go move into the Aussie yen now. Well, we had 74.97, and we're still trying to press up a little bit higher. I don't know. Let me see here. And gold at nearly 1825, so still pressing a little bit higher. That's going to be resistance there. which is 75.03. And support will be 73.81. We'll move into the guppy. We're still continuing to stretch a little bit higher here. We had 35.29. Let's go and see. We're right up here at the 50%. So we'll go with that, which is 35.71. 50% back. Support's going to be right there. 33.93. We're trying to work up a little bit higher and starting odd, but the resistance still remains the same, 81.06. And support's going to remain the same here, 79.64. And that will do it here for FX. So we've taken care of the bias chart. Just a quick look. And you can see here gold pressing back up here towards 1825. Still very strong here. Pullbacks or slide as we continue to press up higher here. And euro, like I said, we did make that good strong push up here, but they weakened after those German export figures came in somewhat weaker than was expected. They were looking for a 13.2% rise. Rise came in only at 9%, and that's after they got whacked pretty good last month. So that was a bit of a disappointment and sent the euro down, trading a little bit on the defensive end, but still very well from what we were, yesterday at this time. Cable's still up in the air here. We're 26.38, so we're well above that weekly level of 26.02 on the spot. And equities are still up here near their highs. You can see here with the NASDAQ. Still pressing higher here. Look at that. And S&P's not as strong as the NASDAQ, but still holding up very well. So we'll see how they hold up as we come into the jobless claims numbers. And that'll do it for today. And thanks for joining us here on the European crossover webinar. We'll get the buy chart posted in the chat room.